After some pretty positive years, we're obviously now starting to see the household spending increase with inflation and interest rates rising at the moment, which can hurt the household cash flow. So in today's video, we're going to talk through some of the ways that you can manage that cash flow to get a little bit more in your pocket every single month to make it a little bit easier during this increased interest rate environment. Now, Benny, this certainly isn't the first time that you've been in a rising interest rate environment or the first time that you've had to tidy up or tighten that spending. So what is the first thing that you do when you're trying to improve or increase some of the cash flows?
You know, when I'm looking at cash flow week to week for my household, I go big rocks first. So the most expensive thing for all of us is either our rent or our interest on our home loans.
Yep.
Now, I talk to 1,000 different investors from all over the world a year, and what I've noticed is that people, let's say you're earning $100,000 at the moment, I've seen people earning 100K with the same equity, the same savings, and one of these people recently this week had a 4% interest rate. Another person on almost the exact same loan in a different area with a different bank had a rate at 5.5%. Now, 1.5% doesn't feel like much, but on $1 million, 1.5% is 15 grand a year or $300 a week. On a 500K loan, you know, even 1% is 5 grand a year or $100 a week. So I think what the banks are doing at the moment is just jacking rates on everyone, sometimes above what the Reserve Bank of Oz is doing at the moment. And because of that, there's a lot of people paying way more than they should. I think the number one thing we can all do is keep the banks accountable, talk to our mortgage brokers, and make sure we're on the best possible rates and save as much as that as possible.
Now, I've personally just done this myself as well. And fortunately for me, a few of my properties are on fixed interest rates at really low rates, which is enabling me to stack some money in the offset or redraw accounts associated with those properties. But one of them's on a variable principal and interest loan. And I've been getting a new letter every single month with an increased rate. Now, upon the most recent one, me and my partner were just like, no, I'm fed up with this. We're calling our mortgage broker. Called him that day. A few days later, the bank actually reduced that rate by about 1.5%. So that actually enabled me to save about $300, a little bit over $300 per month on that mortgage alone.
Absolutely. I think the second thing we can do if you guys are investors is with the rising inflation at the moment, with interest rates going up, with incomes going up, I think there's a very big opportunity Australia-wide to lift your rents. Now, in Brisbane alone, rents have gone up by almost $100 per week in every single suburb that we buy in the last 12 months. And we're buying properties at the moment. We bought one this week for $500K where the rent was fixed because the previous owner had only rented it out for a 12-month lease at $320 a week. I said to the owner when I introduced him to the new property manager that I thought $450 to $480 was more reasonable. Now, for so many of us listening to this, you know, I just do a regular once-a-year rent review. I look on realestate.com, figure out where it's at. I send my property manager an email and I say, as my leases expire, I'm aiming for this. Do you think it's realistic? That one email in January this year made me an extra $30,000 this year in rent across 7 investment properties. So I think it is absolutely worth re-looking at it. People realize they've got to pay a bit more in rent at the moment, and it can be an easy way to improve your cash flow week to week.
Now, I'm not going to lie, I am one to love a good TV show, love listening to my music and podcasts, so I am subscribed to a bunch of different channels. I've got YouTube, I've got Spotify, I've got Netflix, you know, I've got all of these different subscriptions. One thing that I've obviously had to do is just tighten up that discretionary spending and, you know, eliminating some of those subscriptions or maybe partnering up with family members and sharing some of those platforms as well. So rather than having Netflix, Stan, Disney, maybe you just have one of them and then you use your family or friends to try and, you know, make it a little bit more affordable. That can obviously save you a little bit of money there. You know, looking at the food as well, trying to get into a habit of eating at home a little bit more often and, you know, using the food in the pantry from the grocery store rather than going and spending a heap of money on cafes, restaurants, dinners, beers at the pub, things like that. You know, you can really easily tighten that up a little bit by even just eliminating one of those meals that you eat out per week?
You know, for me as well, I think limiting my exposure to surf shops and Bunnings is a good thing as well. Like that's the easiest way, just limit the association completely. You know, I think travel is obviously so important to so many of us. For me, with my family, we've decided that like it has been cool in the last few years to stay in some nice Airbnbs and stuff. But for now, we're just going to go back to simple caravanning trips or, you know, camping trips where it's just so much cheaper and more affordable. Like I don't need to stay in a $300 a night joint when I've got a caravan that I can park for $15 a night. So, you know, this pinch is, you know, catching everybody, and I'm just starting to think about ways that I can simplify, and simplifying is beautiful as well. Like I'm actually getting so much more joy from doing that. There are other things that I've done and Simon's done recently that have been game changers as well. I've always had my phone plan with Telstra, Vodafone, Optus. I've moved away from about $100 a month plan on 3 phones personally to Audi Mobile, which is actually Telstra network anyway. I'm paying $15 to $25 a month for exactly what I was getting there. So I think I've got 3 phones for $45 a month now instead of $300. Done the same with my home and work internets as well. Gone from like Telstra where I was paying a fortune to literally like Aussie Broadband or something where I'm paying like $50 a month for way more data than I was getting and way better speed as well.
I did all the same with my insurances as well. So I had my insurances set up with a few different companies, but now, you know, multiple cars, multiple properties, we've actually coupled it all under the one umbrella, and they were actually willing to give us about a 20% discount on market rate just because we've brought so many assets to them as well. So that was a huge thing. And I think with all of these things, if you just do one, you know, it's not going to really have that big of an impact, but the collective of all of these different things, whilst it's not ideal that we have to do this and tighten up the buckle, it definitely adds a huge amount of income and cash flow to the property portfolio or the monthly expenditure. So if you can, it's pretty easy. And like that transition from internet companies and phone companies and insurances, that's pretty easy, and you're going to get basically the same service offering even if you do transition to these new providers.
100%, man. Like I think the insurance one is such an opportunity for so many people. So I've got a property that's worth 400 grand in replacement value, and if I just did the insurance the same way as everyone else, I'd be paying a couple of $1,000 a year. Now, when you times that out over 2, 4, 6 plus properties, it can get very, very, very expensive. What I do now is I pay up front. I go online because online is way cheaper to do it, or I go through a broker that can go online through his relationships. I set the excess as high as I possibly can, and I make sure the replacement value is tight and in line with what it really should be. And by doing that, I've been able to move that across multiple properties from $2,000 to $1,200. It's an $800 saving, but even more than that, it's 40%. I'm saving 50% on my phone and 50% on my home internet.
Even just being cautious of the day that you go and fill up your car as well. Like it's not a huge amount, but it's still going to have a little bit of an impact. And it just depends on how much this environment is hurting. You know, if we're getting through okay, then may not need to worry too much about it. But if we're suffering and we're struggling, then looking at all of these things is going to be great. But if we're really suffering, you know, a really great way to increase the income is look at trying to find other income, you know, other incomes as a second job potentially if you have to do that, or working a little bit of additional overtime, you know, trying to find a side hustle that you can generate a little bit more income through, or learning a new skill so you can get promoted, or, you know, get a bit of change careers to a higher paying job or something like that. You know, there is lots of different unique ways that we can look at that. Whilst it's scary and does require a lot of time and effort, it can obviously dramatically impact. And that's something that you've done consistently until you started Pumped.
Yeah, like I'm not afraid to have that conversation with an employer in any industry and just go, look, I would like to increase my income. Like, what can I do for your business that's going to help you guys improve whatever it is, like producing more widgets per hour, like managing people, taking some of the pain away from the boss, or bringing in more revenue, and how can I tie that to a financial reward, whether that's weekly, monthly, annually, biannually. Just figure out so many ways. It doesn't always have to be more of your time. Like any one of my employees could come in, and if they wanted to buy an extra property a month for us, or bring on an extra sale, or put themselves in an uncomfortable position, every one of them has an opportunity to do that. And you'd be shocked at how many of you could go and have a great conversation with your employer about that too. But I know a lot of this stuff is really, really basic. At the end of the day, the interest rate thing, the increasing the rent thing, and the discretionary spending thing are the three big rocks.
Yep.
But these are just some of the other things that Simon and I do, because as investors, it's not just about securing your future and getting more time back with your family, and obviously moving through an environment where interest rates are going up and surviving it safely, but it's also about not having to work as many years in the future, being able to save money, which makes you feel good, being able to help people with that money, or being able to reinvest that money to create multiple and passive income streams through shares, through properties, through a business on the side that can get you your time back so that you can become the best version of yourself.
100%. Like, as we said, whilst it's not ideal, sometimes these things need to happen. Hopefully some of these little tips help to increase your cash flow, to make it a little bit easier to weather the storm of these increasing interest rates. Now, the good news is a lot of information is coming out from the big four banks, from the RBA, that they do see that they're getting close to a target cash rate at the moment, which is really amazing news. They actually anticipate that those rates may even start declining at some point over the next 1 to 2 years, which could enable us to loosen up the belt buckle a little bit there as well. But as always, cannot predict the future. Nobody's in Governor Philip Lowe's head, so whatever he chooses to do is what the reality will be. So you need to get used to adapting to these changes in interest rates, because it's going to be a constant over a journey to financial freedom.
Woo!
That's a wrap.
That's a wrap.
Cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.